So the Doji pattern, the Doji candle pattern, the Doji candle pattern is one of the strongest Japanese candlestick pattern. It's one of the strongest Japanese candlestick pattern, comma. Where the opening price and the closing price, where the opening price and the closing price are roughly the same or almost the same. Meaning it might not be exactly the same. That's how I would say they're roughly the same or almost the same. Full stop. Are we together?
Yes, please.
So let's go right. Note. Anytime a doji occurs, anytime you see a doji or anytime a doji occurs, at that point in time, both the buyers and the sellers are not in control of the market. Both the buyers and the sellers are not in control of the market. Both the buyers and the sellers are not in control of the market. Comma.
Okay.
Because it signifies, because the doji could signify, that's two things now. Because the doji could signify, one, a period of indecision in the market. A period of indecision in the market. Where the buyers and sellers are equally weak. Where the buyers and sellers are equally weak.
Yes.
Or a period where the buyers and sellers are equally strong. Where the buyers and sellers are equally strong. Full stop. Are we there? Okay, so in other words, what we are trying to say is that I'm now explaining. A doji, just like we said, it means everybody said, oh, it signifies indecision in the market. Yes, indecision in the sense that you don't know what's going to happen next. That is what it means. Anytime you say a doji, just like I said, it could mean that both buyers and sellers are strong. Now imagine if two strong teams are playing. Thank God the World Cup is presently going on. You know that you don't know who the final winner is going to be, true or false. In fact, I'm sure this World Cup have been surprised because you see teams that we expected that, oh, they are weak teams becoming strong, like, you know, winning their opponents. So in the case of Doji too, both of them could be equally strong. My people have a proverb, they'll say, when two elephants are fighting, what happens? The grass is the one that suffers. Why is the grass, the grass suffering? Thank you, Grandma. Why is the grass? Because both elephants are strong. So the grass in this case, compared to the market, is like you putting in your money. When you put your money on a setup where both buyers and sellers are strong, it's simple. It's your money and your emotions that would suffer it because you cannot tell who the eventual winner is going to be. Or it could also signify when you see a doji, it could also mean that both buyers and sellers are presently weak. You know, when two people are also weak, before you find a winner, have you seen two teams that are playing football matches and all the players are tired? You know, that kind of match can be boring because at some point you feel like one of them should just get up and, you know, kick and get strong and let this match be done and over with. So the same thing with the foreign market. So doji could signify two things: a period of weakness or strongness. Now, just because you see a doji, write this note. Just because you see a doji does not guarantee that the market is going to reverse. Just because you see a doji does not guarantee that the market is going to reverse. Format. But it could mean that the previous trend is losing its strength. That the previous trend is losing its strength. Stop. So, what do I mean? Just because you see a doji, there is no guarantee, even though it can lead to a reversal. Do you understand? That's why we say doji. With a doji, you're not sure. You know, when we treated the engulfing pattern, we could say, oh, the engulfing pattern has like an accuracy of 80%. We are sure because we know this one is stronger than this right now. But with a doji, you cannot tell. But it could let you know. Let's say the market has been making a buying move. Let's say this is it's a ranging market. I remember we said in a range, there are two ways to trade. I don't want to go into that, but you could be buying the support and resistance of the range before you have a clear breakout. True or false? Who remembers that as one of the ways we trade at ranging market? So let's say I'm trading a ranging market, and then this market has been pushing up from this support. It has been buying all the way up. Then it gets close to this resistance zone, and I suddenly see a doji around this resistance zone. It's simple. The first thing that will come to my mind is, okay, the buying pressure that pushed the price up into here has lost its strength. So if I see a doji at this point, it's simple. I could expect a reversal because this is simply telling me that buyers are now weak. So if sellers are able to exert a little bit of pressure, what happens? They will be able to push the price down. So in that case, a doji could lead to a reversal. Do you understand? But some other times too, it might not lead to a reversal. It could just be, remember, the market can always take a period of rest when it's weak. So let's say the buyers go weak, and then this doji signified indecision, meaning they could not push the market up. It was a resting period. And if after the doji, another buy candle comes up with strength, what it means is buyers are now strong again. They can decide to push the market up. So the win rate with a doji is like 50-50 because anything can happen. Always have that at the back of your mind when using the doji pattern for entries. Do we understand? Like we said, oh, Pimba has an high win rate, the engulfing has a high win rate, but doji, expect anything, 50 chance. Do we understand? So write this down. No, when you see a doji candle pattern around a major resistance, when you see a doji around a major resistance after a long buy move, after a long buy move,
After what?
a long buy move, a long buy move,
Okay.
it might likely lead to a reversal. Might likely lead to a reversal. First up. and vice versa. And vice versa. So I'll still explain that later.
All right.
Note, never use this candle pattern alone when taking a trade decision. Never use this pattern alone when taking a trade decision. It's best when combined with a trend. It's best when combined with a trend and market structure. Best when combined with a trend and market structure. Full stop.
Okay.
So now let's go into the types of doji. The types of doji.
Okay.
So apart from the general doji that we're used to, there's the doji, the one that where your opening price is almost the same as your closing. We also have the bullish. Write this down, everybody. Apart from the general doji, we have the bullish doji. Bullish. When you say bullish, bullish is a buy pattern, right? The bullish doji, or another name for it is the dragonfly doji. Dragonfly doji. Bullish doji or the dragonfly doji. While the other one is called the gravestone doji. Gravestone doji or the bearish doji. Gravestone doji or the bearish doji. First up is on the screen. Now, what I always tell people is it's not the name that matters when it comes to candle patterns, right? Because when you want to take a trade, nobody's going to remember, oh, you won't be shouting doji. No, you want to be able to understand what is this candle telling me. And that is why we said wicks are an important part of the candle pattern, right? So don't focus on mastering the names. I can tell you categorically, I don't cram these things. In fact, the names of this doji is something until recently I started having in my mind, I just say, okay, one is bullish, one is bearish. So that's the way I deal with it. So it's not about cramming the names. So let's pick the first one, the dragonfly doji. The dragonfly doji. Or beside it, you can write bullish doji, so you don't forget. Adebayo, are you still here? No response. Oh, yes, let me go. Okay, I wanted to just confirm that. So, Nachi, are you still on the call?
Yes, ma'am.
You can mute yourself up. Okay, so let's continue. The bullish doji or the dragonfly doji is a bullish candle formation. Is a bullish candle formation that has a T shape. T, letter T, that's what I mean by T shape. If you look at it on the screen, there's one that looks like letter T. This is it. It has a T shape. It has a T shape, comma, with the opening and closing price. With the closing and opening price on the body. On the body. on the body. Are we there? On the body. Full stop. The long lower week. The long lower week. The long lower week represents high buying pressure. High buying pressure. Stop. Are we all there? Are we all there? I can't get any response.
Yes, ma. Yes, ma.
Okay. So what we're trying to say in essence is that just look at the candle formation. We said it has a T shape. Remember, we said when we started candlesticks that the opening price and the closing price of a candle is always on the body. So it's like saying this candle probably opened there, closed there on this body. And during the life of this candle, for you to have a long lower wick, it means the prices must have been pushed down, is you know. But at some point, buyers came in and pushed those prices way back up. And that's why we have this long lower wick. So this is like telling us that there was plenty of buying pressure. That was why this candle closed this way. So in other words, this dragonfly indicates very strong buying pressure. So right, note, you will normally find this candle pattern around a major support or demand area. Only find this candle pattern around the major support or demand area. Around a major support or demand area. Comma. Right, notes. Now I want to give you how to trade it now. Notes. If found, that is this candle, if you see it, if found in an uptrend around a major support area, if found around in an uptrend around the major support area, comma, it can be used as an entry signal. Are we all together?
Yes, ma.
Okay. Now everybody look at my screen. This was the last support that became, this was the last resistance that became support, true or false, because the market broke above this resistance. So let's say you are waiting to buy here, and this same zone is where you have your lower trend line, and the market starts to sell into this zone where you're waiting to buy, right? Let's say after the market got back into this support, it was selling, then it got here, the same zone you've been waiting to buy, and all of a sudden you saw this T-shaped candle closing out of this zone. that same area where you were waiting to buy, it's an indication that the market buying pressure there is strong, meaning buyers are waiting to buy there. The moment the candle closes, I would enter for a buy, because this will let me know that the prices are likely to continue to push up. Are we together? Because we are in an uptrend. So that's what I mean by what you just wrote. Now, when you see it in an uptrend around the major support, so it's not enough for you to just see it anywhere. It must be around that zone. Remember the way we mark up our trend? And then let's say you saw an uptrend on daily. You went on H4 for that zone. You're also waiting for the market to come and retest. If in that zone you were waiting for, you saw this candle pattern, the moment the candle pattern closes, you can go in for a buy. Do we understand? That's what I mean by it can be used as an entry signal. So it's not enough for me to say I just saw it. No, I had to combine it with the market structure, in the sense that the market was an uptrend. So me now seeing a bullish signal, because this can represent a bullish signal, is like telling you that, okay, the bulls are in place. So yes, I would expect the prices to keep going up after that. If you understand that, drop a 7 on the chat box. Don't worry, if you're Adebayo that is driving, you can open your mouth and confirm that. So that is what the bullish doji lets us know. Now, right, notes, if seen in the context of a downtrend, if you see this pattern in a downtrend around a support area, if you see this pattern in a downtrend, remember this pattern we are talking about is the bullish doji, right? So it's like saying in a market that wants to go down, you are now seeing a buy signal. If you see it around the major supports in a downtrend, it could mean or lead to the beginning of the pullback move, or a possible reversal, First up, I hope we know the difference between a pullback and a reversal. Who knows? Lady Chairman, do you know the difference between a pullback and a reversal?
Reversal is a change in trend. Pullback is just a short, move, pullback move now before the trend continues.
Okay, thank you. So now we are saying this is a downtrend. Now the market is expected to keep going down, right? But the market will not keep selling. We've established that every trend has 2 moves. So meaning if there's going to be a buy pullback in a downtrend, that buy pullback would happen at a support, because that's where buyers always buy. True or false? So let's say after the impulsive move, then this market got to a support where the pullbacks is supposed to come in. You could see this candle pattern also coming out. Now, because you don't know whether this would be the beginning of a pullback or a reversal, right? Nobody can tell. I will not go in for a buy. Remember the general rule is you don't even want to trade pullbacks, right? So what I'm trying to say is it's better when you use this pattern alongside with the trend. So if it's a bullish signal and I see it in an uptrend, I feel more comfortable than using it in a downtrend and expecting a reversal. Because what if you feel that market is going to reverse and it's just going to do a pullback? And even that pullback, it failed to do it. And then the next minute, the market keeps going down. So what we are trying to say is because you are not sure whether it will lead to a reversal or a pullback, it's better to trade the ones that go alongside the trend. I hope we get it. So it doesn't mean it might not work. In that, of course, it could happen. It could be a bullish signal and then the market will still push up. It happens, right? So even if at all I'm going to trade any pullback, it has to be a major pullback. And I think I've once told you that the major pullback in any trend would happen around the trend line. Like this, this downtrend. the cells happen around the upper trend line, the major buy pullback, it doesn't mean there's not going to be other pullbacks in the middle of the trend, but anyone that happens on the lower trend line, that's what I regard as a major one. If I now see this sign, this bullish sign, I could decide to trade that particular one, right? But with low risk, because why? I'm still trading it against the trend, unlike when I see it in an uptrend. Do we understand? If you understand my explanation, please drop an 8 on the chat box. Drop an 8 on the chat box. Great. So now let's talk about the bearish doji now. So look at the description because you're going to look for these doji candle patterns and send to me. Is important. So write down now the bearish doji, otherwise called, the name of the screen is the dragonfly doji.
Dragonfly or gravestone?
Oh, sorry. Thank you. Gravestone doji. I don't like those names. Can't you see the way the names are sounding like, grave. When you say something is gravestone, and then the same name again is still saying dragon, like things in the Bible that wants to perish. Don't mind me, that's just on the lighter note. So gravestone doji is a bearish candle pattern. Is a bearish candle pattern that has an inverted C shape. That has an inverted C shape or looks like an inverted C. Like this is what I mean. See, upside down as an inverted C shape with the opening price and closing price roughly the same. Roughly the same. Meaning it could be the same or roughly the same, almost the same. That's what it means. Full stop. The long upper wick. The long upper wick indicates the presence of strong selling pressure. Indicates the presence of strong selling pressure. Comma. Strong selling pressure, comma. Even though the buyers push the price up, even though the buyers push the price up, comma, the sellers rejected them and pushed the price way down. Way down. Full stop. You will normally find this pattern around a major resistance or supply area. A major resistance zone or supply area. around the major resistance or supply area. Full stop. Are we there? Okay, so right, if this candle pattern is seen in a downtrend, around a resistance area, you can always sell on the close of the candle. You can always sell on the close of the candle. So, are we there? Now, write this. What I'm going to say now is very important because you're going to find some cases in the market that looks a bit different. Note, for this pattern to be used as a sell signal, you need to find it around a resistance zone. It's important. It's not enough to just see that pattern. It has to be around a resistance. You're going to come across situations where you see this pattern around a support. And in that case, instead of selling it, to buy. So that's why it's important that you see it around the resistance before you use it as a sell signal. Full stop. Who is on their phone? Let me show you something very quickly. Who is on their phone right now? I want someone whose background is not noisy to quickly share their screen.
Out.
To let you down your phone, I don't know, there's this background noise. Lady Chioma, can you do that for us? I know Adebayo is driving. Lady Chioma, are you on this call?
Yes, I am.
Hey, you're gone. I'm making you co-host. So you can share.
Okay.
Yeah, rush to NZD USD very quickly. I've made you co-host.
You said what? NZD USD?
Yes. On H4.
Yes.
I'm not seeing your screen yet.
Can you see it now?
Not yet. You're not sharing. Everybody pay attention. What I'm about to show you is very important. Trust me.
Can you see now?
Yes, I can see. Good. Can you highlight that last support? Put an horizontal line. Everybody, let me know when you're seeing our screen. Good. Now bring that line a little. Now zoom out. I want them to bring that line a little below those candles. Bring it down below them. Good. Now, can anybody see a candle that looks like this gravestone doji? That's like an inverted C. Are you seeing it?
Yes.
Let me know if you can see it on that last part.
Yes.
Remember, it's a sell signal, like what we said just now. But is it at a resistance zone?
Is that a support?
Good. In this case, when it was as a support, it functioned like a normal doji. You know, a doji could lead to a reversal, meaning the market was selling. Then this doji came out. Even though it was a bearish doji, what did the market do? It went the opposite direction. It bought. And that was because this particular doji came out at the support, right? Even though it's a bearish doji. But if it was sighted around the resistance zone and look like an inverted C, that would likely give you an opportunity to sell instead of buying. Do you understand? So
Yes.
importance is not just enough to see the candle pattern where it occurs matter. Now, Chema, go to the past. Shift. I always like people doing their screen horizontally so that people can see. I would have seen this thing I want to show you now at a glance. There was a previous resistance. Okay, good. Shift to the side. Let me see what has happened in the past. No, don't worry. That's one. Good. Now, everybody, look at where she put that line at the top. Can you see this same gravestone doji? But when it occurred at the resistance, did you see how the market came down and sold? Did we see that? Lady
Yes.
Choma, can you put an arrow to that? Let them see. Good, everybody. Thank you. So can you see the candle? Even though it has a very small, tiny wick under, yes, sometimes the market might give you that, but that's still the same candle pattern. Now, when this gravestone doji occurred at a resistance, the market sold. Thank you. Now come down to the previous support that became resistance. There were places where it sold. This candle pattern still occurred there also. Look at that your line at 061909. That lower,
Okay.
yes, in the past where it sold. No, don't put another line. Look at the cells
Okay.
that were below that zone. There was a point where that same gravestone doji occurred. The line 0619. Good. That candle. Now put a line, put that arrow there. You will note out this candle in that same zone. You could have used the first arrow now. Just move it. Good. Now remove that line so that they can see that candle pattern very well. Remove those or shift those lines down. Just shift them. Use your hand and drag them. Good. Drag the other one too. So point to that candle very well. Can you see the same gravestone doji? But this time, because it was in a resistance area, when the market was in a resistance, what did you do? The market sold right after that candlestick came out. Are we together? Are we noting the difference? So it is important where it occurs. If it occurs, if you see a gravestone doji around the support, market is not going to sell you, ladies and gentlemen. It might lead to a reversal and function like a normal doji, because at the end of the day, bearish or bullish doji is still a doji. Are we understanding? But when you use it in the downtrend and it occurs around the resistance, you would have yourself. Even in a ranging market, can you see this point where Lady Chioma pointed out? That was a range. The market ranged briefly at that point. Can you see? So even in a ranging market, in a ranging market, there are two ways to trade. You trade within the range or breakout. So if somebody was selling the range, selling at the resistance of that range, and this candle pattern came out, so still a sell signal, it would have sold. Are we together, ladies and gentlemen? So thank you, Lady Chioma, for sharing that. So now let's write. No, if you got the point I was trying to make there, please drop a 9 on the chat box. Let me be sure everybody got that point. If you got the point I was trying to make out there, please drop a 9 on the chat box very quickly. It's important. Good. So it's not enough to say, oh, I saw a bullish doji. I saw no. Where it occurs is also important if you want the doji to function well for you. So write this down. Note: if the bearish doji is seen in an uptrend around a resistance area, is seen in an uptrend around a resistance area, it could mean the beginning of the pullback move or a reversal. It could mean the beginning of a pullback move or a reversal.
Please come again.
So did we all get that? Did we get that? So in essence, write this in summary. Write this down, everyone. In summary, whenever you're using any candle pattern, let it be the one that goes along with the trend. It's always better. Let it be the one that goes along with the trend. They have more high winning rates than the ones that go against the trend. Are we together? So another trick about using the doji, this is one way, another way you can use the doji, but whichever one you want to do, it's still have low risk on it. So this is it. Let's say I was waiting in an uptrend to buy around a support. I've gone to the daily, I've marked out my daily, and I saw, oh, we're in an uptrend. I want to buy at this last resistance that it became support. That's where the market broke out last. I'm waiting for a retest. It's simple. That zone where I'm waiting for a retest, the market will need to sell to get there before I can buy, right? So let's say after a sell candle, I now see a doji that closed in that zone. Two things. Remember, a doji deal does not guarantee reversal. So what it means is after that doji, the market can still continue to sell and break, right? But you can be aggressive with your entry or you can be conservative. What do I mean by aggressive? Aggressive means the moment that doji close, you can decide that, okay, since this doji occurred not just in the middle of the chart, but on this same support where I was waiting to buy, I can decide to enter for a buy the moment that doji close and place my stop loss, because why I'm buying is because of the doji I saw, is it not? So I'll place my stop loss some pips below that doji or below that zone where I was waiting to buy to be on the safer side. So as I said, if the market closes below the zone, then that buy was invalidated. But as long as it's still sitting on top of that zone, that buy can still push up. So if I enter aggressively that way, the next candle, if it now goes up bullish and closes above the doji, I would have a lower entry than people that will enter after that bullish candle close. True or false? Let me be sure I'm making sense to these people. True or false, everybody? It's good. So by that way, I was more aggressive. I will make more profits. But the people that are conservative, you want to be more sure because a doji does not guarantee anything. So when you see a doji at that support where you've been waiting to buy, it's simple. It can be telling you that, okay, the selling strength is drawing over. That's how you have the doji. Some will now wait for the next candle that would appear after the doji. So let's say the next candle that comes up again is now a bullish candle. Some will now enter after that bullish candle and buy because now they are sure that, okay, it's the buyers that got stronger. So I'm telling you that there are two ways you can trade this normal doji when it appears. You might either enter immediately on the closing of that doji in the direction of your trend, or you wait for the next candle after the doji to close to be more sure which direction the market wants to take. That's the case of this general doji. But for this one is always already telling you bullish or bearish. You are not waiting for the next candle to close. I hope you understand. Do we all understand? So is there any question on this? Let's have it very quickly. I was hoping I could round up before grammar session. And I think I met up with time. Then before I forget, in case you have any question, please, from today, this set, because we are rounding up with, what's it called now? We are going for after candlestick, I think we'll go into Fibonacci. Please, I want to start seeing your trend. You need to start practicing now. Remember when we're dealing with trends, we said the last thing we need for our entry are the candle patterns, right? So so you don't forget and so you can get better, every day now is compulsory, at least 3 times a week. You must send me a market you've analyzed, meaning you send me the chart, tell me when you're going to enter, or tell me, okay, I'm waiting to enter this zone. Now, once you're waiting at that zone and you see any of the candle patterns we've treated, either doji or engulfing so far, come out of that zone. You know how to place your buy. Your stop loss will be below that zone or below the candle pattern. Put your TP based on the next zone in the market and start shaking them on your demo. I want to start seeing your trade reports. So from there, that's how we know, okay, this is this area, because everything you've learned so far is theory. Until you start practicing it, your emotions and everything to be able to wait out these trades is from the practice. So please, I hope we got that. Don't let me remind you. If you don't send, no wala. But the people that send, trust me, they always make better traders. So please, it's important. At least, no matter how busy you are, even if it's just 2 markets, just pick. Or maybe 0 USD, AUD. Pick 2 markets you want to be very good at. Master them by practicing them and sending the analysis. Let's take a look at it together. Do we understand, everybody? If you understand and got that assignment, please put a 1 on the chat box very quickly. Put a 1 on the chat box. So this said, I've not said every day, at least 3 times a week, you need to analyze, at least. And if you want to have good entries, better you make your analysis on Monday so that you see where you can join before the week runs out. Monday, Tuesdays, so that you don't miss entries for the rest of the week is important, please. So the assignment I'm going to give you for today now, you are going to check out the charts, mark out 3 dojis, normal dojis, then look for cases of bullish and bearish doji also. 5-5. Let's see how we played out. And then you send me the screenshots. That would be the assignment for today. Is there any question on this doji? Any question on the doji? Okay. Another thing, since nobody's asking, another thing I don't forget is when I'm dealing with a doji, I don't risk much. If I'm using the doji pattern as my entry signal, I wouldn't risk as much as I would do when I'm using an engulfing pattern or a pin bar. So I think our next class will take a look at the pin bar and why it is regarded as an high probability setup. So thank you, ladies and gentlemen. It
The
seems nobody has
assignment again, please. Assignment again, please.
Okay, the assignment is let's look for 5 dojis and send it to me. So
Okay.
when you're sending, just notice how the market reacted when the doji occurred. Maybe did it reverse or did it continue? Just see the win rate. I need people to experience it. Then,
Okay.
yes, look for 5 cases of bullish and bearish doji. And you see them also circle. So when you send to me, just write, oh, market reversed. Oh, I saw a bullish doji. It sold. Market sold after the bearish doji. Market bought after the bullish doji. Underneath what you screenshot and send. That's the assignment.
Okay.
Yes, ma'am.
Thank you. I hope we'll get the recording version of this.
Yes, I will send it. So thank you, everyone. See you on
Thank
All
you
right.
very much.
Thanks, Coach D.
Bye bye, ma.
Thank you,
And
Coach.
let me stop this recording
Bye.
first. Bye.